$50.
Yes.
And I sign you in.
If I die tomorrow...
If you die tomorrow...
You'll have to pay the 500.
Yeah, the 500 has to be paid.
So you're taking a high risk.
So do you see the risk that the underwriter is taking? Yeah? So
yes.
The same, if you outlive it,
yes.
you live for more than 10 years and nothing has happened, then that money goes to pay somebody else who had that debt.
So if I was 90 and I took one for 10 years and I'm hitting 99 tomorrow, I might consider suicide.
Again, suicide, there is a period which is put whereby the policy benefit can be paid if you die by way of suicide.
Okay.
Mostly it's 2 years. So you cannot take the policy today, you commit suicide tomorrow.
I see.
Yeah.
John Wachira Mureithi.
Yes, sir.
Welcome.
Thank you.
To BananaLand Media.
Thank you.
Big company.
Thank you.
A big company to be.
Thank you.
Yes.
It's a big company already, I can see. Yeah.
Yes,
it's a big company. Congratulations.
Thank you. Well, congratulations. I come here and it's a whole farm. I thought I'm coming to your small office. I'm coming to almost the whole building.
We are trying.
Yes.
Yeah.
And fair tax and insurance services.
Is fair insurance and tax services.
Insurance is key.
Yeah, insurance is the key. Yeah.
Yeah, because you guys do a lot of things.
Yeah, we do a lot of things.
Financial.
Yeah, financial. Yeah, we do financial consultation, and also other life consultation related to well-being of human beings.
Oh, okay.
Yeah.
Okay. Basically, you can mentor someone.
Yeah, we do that.
Life growth.
Yeah, we do that because we are there to empower the incoming generations.
Wow.
Yeah.
Wow. You know, I've known you for more than 10 years. It's
more than 10 years.
More than 15.
You are the first person I knew when I came to this country.
Oh, really?
And that is 18 years ago.
You have a good brain.
Yeah, 18 years ago. Yeah.
Wow. Yeah, I'm one of the first people. Yeah, I remember. You are
the first people to meet because we are the ones who are doing us showing us around.
Yes.
How to move about, how to transition from third world country to developed country.
And you came and you conquered.
We are still there. We haven't conquered. We are still on that route.
Wow.
Yeah.
Wow. Well, one thing I can tell you is when I thought of anyone finance in Raleigh, I thought of you. First of all, because of how well you are known in terms of integrity. Your name is so clean out there. I guess an accountant, a finance person has to be very clean as a whistle because it involves money.
Yeah, because you cannot talk about money and you are not somebody who people can rely on.
Yeah.
So you have to be somebody reliable, otherwise people will not trust you. Yeah.
Wow, that's really a good thing. And you cannot teach something that you are not, basically.
Yeah, because if you teach something that you don't know, you are out to fail.
Sometimes I teach things that I'm trying to learn, but
because that is actually what we call planning to fail.
Planning to fail.
Yeah.
Oh my goodness.
Yeah. So if you are to do something or to teach something, make sure that you know in and out.
Yes.
what you are talking about, so that you are able to handle the objections, because in life objections are too many.
Yes, yes.
Yeah.
Well, guys, welcome to yet another BananaLand Media episode where we bring you education and entertainment. We have fun here. We learn a lot. So it's not a place where we just come and have fun alone. We learn a lot. So this channel is where you'll come and you can stick in this channel for hours and hours, learning and listening to great people like John Mureithi. John Mureithi is based in Raleigh, North Carolina, and I'll put his contacts here at the end of the episode, because you will need him. You need him if you have a business, if you need life insurance, if you need any advice in terms of investments. There are a lot of things I can say about him, but he will say them himself. And this will not be the first and last episode with him. So more will be coming. I know you guys might want to have a lot of questions answered, but this is just the first episode. So subscribe, hit the like button as we continue. And again, welcome to this channel. And thank you for accepting my invitation, in which I invited myself to your business place.
Thank you, Mr. Sam.
Yes.
It's a honor to even host you.
Thank you.
You are a very rare person, as I always tell you.
I'm always...
You are always on the move, out
Yes.
of state, probably out of the nation.
Yes.
Yeah.
And you know, my car gets a lot of all those places because I move with equipment.
Yeah.
I have to drive.
Yeah.
It hits a lot of mileage.
You are doing a very good job.
Thank you. Thank you.
Yeah.
And today we are going to nail in onto insurance.
Yes.
We know we'll hit a lot of investment. We'll go to taxes very soon.
Yeah.
Yeah. You're a one-stop shop when it comes to anything finance and growth, in terms of finances especially. And your company, you said insurance and taxes. So insurance, let's break it down. What insurance do you provide?
Okay, first of all, let me say that, let me just introduce myself.
Yes,
I go
yes.
by John Wachira Mureithi, and I own an insurance agency company, tax company called Fair Insurance and Tax Services.
Yes.
I'm a registered insurance agent in the state of North Carolina. So I'm licensed to sell all insurances. That is property insurance, life insurance,
Yes.
and health insurance. But my focus is mainly on life insurance.
And let's then nail that life insurance. You know, that's actually one of the complicated one, because a lot of people don't understand it well, including myself.
Yeah, actually you are right, because many people, when they hear about life insurance, they only think about death and putting in money where they don't see the result. Because a life insurance is a situation whereby you put in some money in an insurance company called the underwriter, with a promise that if an eventuality occur, like death, an amount is paid to your beneficiary. So it's a promise between two people, the insured and the insurer.
Yes. How do you get to know for certain that they will do it? Is it a law? What happens after demise?
Actually, the laws of this country actually are too strong that they ensure that if you are covered,
Yeah.
and at the point of loss of life, you have paid all your premium, they will make sure that you are paid.
Okay.
Yeah, so there is no way that you find yourself in a situation that you put in a claim and is not honored.
And it's not honored.
Yeah.
And so let's get deeper to this. Say I wanted a life insurance, and maybe my whole family is in Kenya. And for a reason, a bus runs over me, God forbid. And what happens? And maybe I wrote someone in Kenya as a beneficiary. What happens? Do they have to reach him? Do they get a visa? What goes on?
Okay, this is what happened. When you elect somebody to be your beneficiary, definitely you will give information for that person.
Yeah.
The name, identification, if identification number, the relationship, and through that information, they will reach out to the beneficiary.
Okay.
And
no matter where on earth.
Yeah, no matter where on earth. So as long as you are the one insured, you have actually qualified to be insured, because not everybody qualified to be insured.
Oh, okay. Not
even
everyone.
If you are in this country, because you might find that you are not qualified. Or
what can make someone not qualified to be insured?
Like in the US, if you don't have a social security number, definitely you are uninsured.
You are out.
You are out. Yes, and again, yeah, because that is one of the factors which actually identify you.
Okay.
Yeah.
I see. Yeah, that's the...
So if you are qualified, you as an insured, the beneficiary can be anywhere in the world.
So what if I had a TIN number or the tax ID number?
Of course, tax ID number, you get it. Yeah, for you to get a TIN number, definitely you have some kind of identification. Which, because there is information you give.
Which includes the social security.
Yeah, which includes the social security.
I see what you mean.
Yeah.
I got you. Wow. So, especially, I know you cover everyone, Americans, Kenyans, and other Africans, you know. But which one is your major?
Actually, I don't focus on a certain community.
Okay.
Because what I do is that I market insurance
at large
to everybody.
To everyone.
Everybody I come across.
Okay.
And my first thing is to do prospecting. Prospecting is whereby you identify a suspect.
Okay.
A suspect is a person who is likely to buy insurance. Then after doing a presentation of what I'm marketing, then from there we will be able to know whether we will proceed from there.
Yes.
Because if probably you don't have a social security number, even
no
if you need insurance, then I can't help you because it is not acceptable.
You are totally closed out.
You are closed out. So that is the first. We have to be. You have to have at least the social security number.
Yes.
To enable you to be covered in this country.
Okay.
Yeah.
So the community, when we lose someone here, sometimes we end up having to do a lot of fundraisers because someone was in the hospital and maybe they had accumulated a big bill and stuff like that. They need to be transported, maybe back to Kenya. And especially Africans, maybe I'm generalizing, or maybe it's a stereotype, but there is this tendency to fear death because of our culture.
Yeah.
And we run away from life insurance because it brings you're insuring yourself after death. And you're not going to see the benefits personally. Why is it that mostly our community, we end up just depending on fundraisers at the end of life? And how can you help us understand that we really need that?
Actually, as you have said, the cultural background also has played a very big part in this issue of insurance, because where we are coming from, that is Africa, our culture, some of our culture do not allow us to talk about death before the death has occurred. But the way the world is going, things are changing, and that's why we have the agents. The agents, insurance agents, are supposed to educate the people to know that life of the other people who are left after your death still has to continue. This is your spouse and your children, because you find that when life terminates, the lifestyle changes for the left family. And so that's why, as an agent, you are supposed to educate the masses that life can still continue even with the demise of a breadwinner. And so, as an agent, our work is actually to speak on behalf of who are left after the death.
Okay.
They will suffer the loss of their loved one.
Yeah.
But then, if this person had a life insurance, at least they will have a financial base.
Yes.
To take care of them as they adjust.
Oh, so
to
it's not
situation.
just the expenses for burial and transportation, and maybe paying the back bills, the credit cards, maybe the debts. It also covers if the money is remaining, right?
Yeah, because when you are selling a life insurance, there is something we do called financial underwriting.
Okay.
That's the starting point.
Yes.
When you are doing an interview to a prospect. A financial underwriting will enable you to identify the worth of this first person to that family.
Okay.
That means if that person is not there, the financial obligation, his financial obligation or her financial obligation will not be filled in a magnitude like it will be filled if you didn't have a life protection. Insurance.
I see. So say I had a coverage of 1 million and maybe I had a debt of 150,000. Is that debt going in? Is the insurance money going to go into that debt, or that separate?
Normally, it doesn't work that way.
Okay.
When you take an insurance policy, all the benefit or the face value of the policy is paid to the beneficiary.
Okay.
Now is up to the beneficiary to pay for those debts.
Yes.
Okay?
Okay.
They clear those debts so that they don't haunt them.
They receive the money first.
Yeah. The money goes to the beneficiary. The insurance have got no
nothing
mandate
to do with this guy was bankrupt, this guy was like this.
Yeah.
Oh.
So if the money is paid after you sign up a claim.
Yes.
And your 1 million is paid to your wife. Now your wife, if you had a house mortgage, will pay the balance of the house mortgage.
The house mortgage.
Meaning that now that house will be debt free.
Yes.
If you had a car which had an outstanding loan, that money will pay that for that the outstanding balances.
So if we reason it out, you're taking care of your family even while you're gone, in a way.
Yeah, let me say, in a way, you'll find that life after death for the people who are left, sometime even becomes better than when this person was alive.
Yes.
Though there is that the effect of the loss of that person.
Yes, true.
But insurance will come to make sure that some of the debts that were bombarding you are taken care of. Yeah.
Now there's this question, and I think about it a lot, and I think reading this book once, it's a book I love reading, especially financial books. This book, it's called The Wealthy Barber. I can't remember the writer, but you know, I'll put the link on the description. That way, if anyone wants to buy, can click and buy the book through the link. It really helped me a lot. It's about this barber in a barber shop who was very wealthy, but he used to cut hair, but had a lot of real estate around his town. And people were asking him questions, how he got that wealthy and he's still cutting hair. And he told the guys, as long as you come here every Wednesday or something and listen to me, I'll tell you something and you go do it. And once you do it, come back for another lesson. And helped the community so much, they ended up growing. So it came to this point where he was explaining to them about death insurance, because he talked to them a lot about everything in life, and part of it was death insurance. And if I will not say you quote me on it. I could have read it somewhere else, but I think I got it from him, that when you are young, you rarely need death insurance because you can invest the money that you're supposed to put in the death, and it can bring forth returns before even your demise in larger amounts. And he said, if you're at a certain age, maybe, or at a certain risk factor, maybe at that point you need life insurance. And to say that this book was written maybe over 20 years ago. So I don't know what it is today. I don't know how right he was. I don't know, maybe I did not understand his statements. What can you say about that? Because that guy made me not buy my life insurance for a long time.
Okay.
Yes.
Okay. You see, the life insurance, not everybody is supposed to have a life insurance, because actually you are doing what we call is a protection. The life insurance is a financial protection.
Okay.
So, as you said, as a young person, you don't have a family. You don't have anybody who is relying on you financially.
Yes.
So if for example, anything happens to you, nobody suffers a financial loss.
Yes.
So you don't need...
In any case, most likely you are a liability.
You don't need insurance.
Yes.
Again, there are also those people who don't require insurance. If you have all that, your financial base and your investment are too high, and they can be converted into real cash immediately.
I see.
You don't need insurance.
Okay. Yeah.
So insurance only is there to protect those people who are not sure of their financial position. Meaning that...
in case of anything.
Yeah, meaning that, for example, if anything happens to me, and probably I have some children who are going to school, probably they won't be able to continue with their education.
Yes, yes.
Because I was the contributing person in their education.
Yeah.
Probably the house that we are living in is on mortgage, and I was the one who was paying. So if I'm not there, that house will be put on a foreclosure.
Very
because
true.
Those who are left might not be able to pay for it.
Very true.
But if you are somebody who has paid off your house, you don't have anybody going to school, your spouse is okay financially, you don't need insurance.
You don't need it.
Yeah.
Wow, I see. That answers my questions very well. So the guy was right.
Yeah, but then
I thought it was a controversy.
Yeah, but then when you are young,
okay,
of course you are not going to remain like that. One day you get old, you get married, and you get children.
Yeah.
So you can plan ahead, because insurance is very cheap when you are young.
Very cheap. And does it increase in price?
The price doesn't increase, but the value remains constant.
Okay.
But you can also review the face value as you grow.
Okay, I see.
The only advantage is that you won't be required to do what we call a medical underwriting, which is one of the biggest hindrances in insurance, because when they do your medical underwriting, when you are advanced in age, you have so many health conditions, which makes the insurance become too expensive.
Okay.
When you are young, like now, you don't have health conditions, so your insurance underwriting will rate you very cheap.
Okay.
So at the point that your health condition starts, you're already covered.
I'm already covered.
Yeah.
Very true.
Yeah, so that's the advantage of taking insurance when you are still young.
Okay.
Because you know that with age, so many things comes in.
Yes.
Yeah, other people come in who are relying on you. And so you'll be a point ahead of others.
Yes. Yeah. Well, let's take a quick break, but let's say this program today is brought to you by FAIR Insurance and Tax Services.
Yeah.
It's basically sponsored by him, because he's not charging me for all this information. I'm getting it for free. And thank you.
You know, knowledge is power.
Yes.
Because I hope there's somebody somewhere who will learn something from this discussion today.
Yes, definitely. So, Mr. John Mureithi, I had this other question about the categories of life insurance. I don't know if you'll explain to me the categories first, or I should ask the specific question first.
I think I will highlight the category first, then probably from there you'll pick your question.
Yes, sure.
Yeah, actually life insurance is, there are two types. There is the one which we call term life insurance.
Okay.
Term life insurance is a temporary insurance which goes for a term of period.
Okay.
Between 10 years and 30 years.
30 years.
So you can choose, you want a term insurance for 10 years, 20 years, or 30 years.
Okay.
So term insurance is actually a death policy. It doesn't have any cash value. You as a life insured, you can never benefit from that policy.
Never.
Because it matures when you are not there. So the only people who can benefit from that policy are the beneficiary.
Yes.
That is your spouse and your children, or anybody else who is listed as a beneficiary.
So what do you mean by 10 and 30?
That is that you choose the term period, because, for example, it's very popular, especially for old people. Because, take for example, you feel that you are old enough, and probably you think that you are likely to live for the next 20 years.
Oh, you're kind of, you're projecting and you're saying, I will not make it another 30.
Yeah, so you project that you are going to live for that 20 years.
Yeah.
So you take a term policy for 20 years.
Yes.
So during this period, from the day one, when you take that policy, take for example, probably you have taken a policy which pays you $500 The day you sign that policy, the day you pay your first premium, if death occur anytime from the day you pay that first premium, that face value money matures.
Okay.
So that is what is paid to a beneficiary.
Oh, okay. If I take a 10-year term and 10 years hit.
If 10 years hit.
And or if I'm alive.
If you are alive after 10 years, now after the 10th year, you outlive that policy. So what happens is that your agent will come to you asking you to renew your policy for another period, because after 10th year you are not covered.
Have I lost this money?
Yeah, a term policy is not an investment. It's not an investment. Yeah, that's a death policy. Can you imagine?
Yes.
Imagine you are paying a policy. Probably you are paying $50 per month.
Per month, yes.
We sign in today. I sign you some today.
Yeah.
You have taken a policy of 500,000.
Yeah.
You pay $50.
Yes.
And I sign you in.
If I die tomorrow.
If you die tomorrow,
you'll have to pay the 500.
Yeah, the 500 has to be paid.
So you're taking a high risk.
So do you see the risk that the underwriter is taking? So
yes.
The same, if you outlive it,
yes,
you live for more than 10 years and nothing has happened, then that money goes to pay somebody else who had that debt.
So if I was 90 and I took one for 10 years and I'm hitting 99 tomorrow, this I might consider suicide.
Again, suicide, there is a period which is put whereby the policy benefit can be paid if you die by way of suicide.
Okay.
Mostly it's 2 years. So you cannot take the policy today, you commit suicide tomorrow.
I see.
Yeah. That's proud. So nobody will pay you.
No one will pay you, and I'm gone.
Yeah, that one you are gone.
Oh man, I'm learning so much in a very short time.
Because when you are signing for the terms, you find some exceptions.
Okay.
So those are the exceptions.
If
you are found that you committed suicide within this particular period,
or a day before when I overlived it.
Yeah, when this period hasn't expired, your policy is null and void.
Oh.
Because you had planned for it.
Yes.
Yeah.
Okay, let's go on with the next category.
Okay. I haven't exhausted the term policy. Okay, the term policy is the cheapest life insurance policy.
Okay.
Because it's generally just for protection.
Yes.
Nothing else.
Nothing else.
Once somebody has to die for this to come into the picture.
Yeah.
Okay, the good thing with this policy is that it takes care of any debts that you had. It also takes care of, take for example, if you had some kind of bills in the hospital, probably you had children who are still in school, so this is money which you will be able to take care of these things for that time. So it's actually protecting your family.
Yeah, I guess.
So they won't be followed by your debts or anything that may make their life unbearable.
Yes.
They won't be chased from their mortgage because it will already be paid.
It covers it.
Yeah, so actually they will own the house after you are dead.
They'll own it.
They will own
your
that
death
car
is their fortune.
debt free after you.
Yeah.
But you have to take the risk of paying that premium every month, because the moment you don't pay that premium and that policy lapses, then you lose.
It's null and void.
You lose 100%.
Oh, really?
Yeah. So you are taking a risk because of my promise as an underwriter.
You know, I once bought life insurance back then. with a Mary something.
Okay, can I ask you a question? Why did you buy it?
I was convinced by someone to buy it, and because he was my friend, I decided, let me support him. It was not even for me. But because I was not so responsible financially, it lapsed. So that money was gone, and gone for good.
That's why a good insurance agent will make you understand that you are not going to buy insurance through emotion.
Yes.
Or buy insurance which you are not going to own it. Because even me as an agent, I won't sell you such an insurance.
Okay.
Because what will happen is that I know you buy it today, and at a certain point it will cancel out. So when it cancels out, you lose money.
Yes.
Okay?
Yeah.
And then you are the person who is going to go out there and put a bad name on insurance.
Yes.
That you had insurance and you lost this. I've paid for 3 months or for 1 year, and I lost everything. But it's you who failed.
It's me
on
who
your
failed.
part performance.
Yes.
Because you didn't honor the promise that you made with the underwriter.
Yes.
So, as an agent, if I notice that you are buying insurance because through emotion, or something has happened in your family, probably there was a death, and from that you saw a situation whereby you realize probably I need life insurance, but you are not convinced fully.
Yes.
So chances are that you won't keep it. Yeah.
Okay. So in this category, or maybe in all, maybe I'll ask this question before I forget it. Can someone buy a joint insurance with a spouse?
Okay. As we go on, I'll come to an insurance which now combines you and your spouse.
Then let's go on with.
Okay, so with the benefits of the term insurance, when the payments are made, the benefits are tax free.
Okay.
So you as a beneficiary, you don't incur
even if
tax.
the beneficiary is from out of country.
Yeah, no tax.
Okay.
It's called a deferred income tax benefit.
I see.
That's why is better than when you are selling a car or whatever, because the money you receive after selling a property, you have to pay tax on it.
Very true.
For life insurance, is tax free.
Yes.
And as I said, if you outlive your policy, you can still renew it for another term.
Okay.
Okay?
Yes, you can renew it.
Yeah, so it doesn't mean that when the term ends, now you will never be covered.
Yes.
You can renew it, but now the terms will be different because we are going to do
a
new medical underwriting. Your age.
Yeah, you are older.
If probably when you are young, you are not smoking, now you are smoking, those things will also factor in.
Those are factored in.
So you'll find that at this point, your premium will be very high.
And after you finish this term, you cannot go 3 months, then you decide to renew. You have to renew before this one is over, right?
You can.
Okay.
You can, only that window period of 3 months, if anything happens to you, you are not covered.
You're not covered.
So as an agent, and because I know your insurance period, I'm supposed to follow you and tell you, okay, in fact, the underwriter will write to you. They'll tell you your insurance has come to the end. Do you want to renew?
Oh, they'll notify you.
So they will notify you. So if you decide no, if you stay long before you go back, if they deny you, you can't blame them because they have given you the ample time to make up your mind.
I see.
Okay. Yeah. Then the other life insurance is called whole life.
Whole life.
whole life is a permanent life insurance.
Okay, that's interesting.
A permanent life insurance, when you take it, can go up to 120 years.
Wow.
That is if you are going to live that long.
That long.
Yeah.
Yeah.
And whole life is pricey compared to a term insurance.
Yes.
Because whole life has so many benefits.
Okay.
Many people use it as an investment insurance policy. You can use it to further your financial base, to make your financial base. So what happens is that in a whole life policy, we have riders. These riders are the ones that make your policy identify or certify your need.
Okay.
Because we have several riders. Let me just read some of them so that I don't omit any of them. We have a terminal illness rider.
Okay.
We have a chronic illness rider.
Okay.
We have critical illness rider and a critical injury rider. So these are attached to your policy.
So by that you mean you will be taken care of
In case of anything like that.
all your needs, basically.
Yeah, so the more riders you put determines how much you are going to pay for that policy. You can put all the riders. It will be expensive. But at your point of death, you'll find that all these things will be covered.
I see.
So you won't be in a financial situation by where you are supposed to get into a pocket.
Yes.
Okay? So let us discuss, okay, in this whole life policy, one thing you have that the protection, the face value protection, which is as a result of your death. So the amount that you are supposed to be paid comes to realization at the point of death. At whatever time these happen.
Yes.
Okay? Then this policy has what we call it accumulates what we call financial cash value. It has a cash value accumulation.
It comes with cash value. Yeah. That's the investment part of it.
Yeah, so the period that you are in that policy, the cash value grows. Cash value is money that you can withdraw when you are still alive.
And that is at will.
Yeah, at will.
Under any circumstances.
You can withdraw that money at will, and your policy is still intact.
Yeah.
It's only that you have some money. It's like equity in a house.
So this money, is it an investment? Is it?
Let me say is some kind of a benefit to you, because you can use it to do a business. You can use it to pay for your children's tuition. Yeah. You can also use it to finance a wedding if you are a young person.
If you are a young chap.
Yeah.
Yeah.
So for this one, as insured, you also have a situation whereby you can also benefit when you are still alive.
Okay. So this money, because that's interesting, and say I am paying a premium of $200 every month, and what's the promise of this money? Is it that I will be taking $50 out of the premium, or we will invest $50 that will grow in interest? So basically you're investing money for me, like in a stock market or somewhere. Is it coming with some kind of growth?
No, that one it doesn't work like that.
Okay.
Okay, you are given an example that you are paying $200 per month.
Yeah.
That is the premium you are paying for a promise of, say, 500,000 face value death benefit on your life. Okay? So, as you go on, the premiums you pay in relation to your face value, there is accrual cash value that is calculated.
It's calculated
itself.
Okay.
So you find that after 1 year, you have accumulated cash value of 1,000 or 700.
So how they made that money is not really my problem.
that one even I don't know. That's underwriter's job.
Okay, I see.
So as your policy advance from time to time, 1 year, 2 years, until at the point that probably you can also withdraw. And when you withdraw, you get all the accumulated cash value. Now the only thing is that any withdrawal or cash value that you have taken in that policy will reduce your face value, because at the point of death, your face won't value be the same, because they will reduce it with all the monies that you have taken.
So this cash value is basically, it's like just cutting a little bit of what would have been given to the beneficiary.
No, it's not cutting a little bit.
Yeah.
It accumulates on top.
On top.
Yeah.
I see.
On top of your face value.
And I can pull it out before.
Yeah, you can pull it out.
That's not bad.
Yeah.
Is it a substantial amount, for example?
It will depend at what point.
It depends at what point
you want that money, because if you want it after 1 year, they will be very demanding.
For the sake of advertising, do you have an example of what you are offering? Just generally, not accurate numbers.
Let me say that as for cash value, there are so many factors that goes around that.
With the person, with age.
And actually that one at a level of an agent, I won't be able to give you such figures.
I see, because also the premium depends. It depends also on the premium itself. There
are so many things that play part, because even your age, as you advance in age, also that one factors in. But again, in the same whole life policy, you can also take loan against your policy.
Possibly.
Yeah.
You
can borrow money against you. If you go to the bank, you can put your policy as a collateral. So even there's companies, the same insurance company, they will give you loan against your policy.
So say I have a $500,000 policy and I take a $300,000 loan.
If you qualify for that.
Okay, if I qualify, or they have to do their math and see
if you qualify
it's a
for
percentage.
That, if you qualify for that, you'll get that money and do whatever you want to do.
And maybe use it to, say I'm a good businessman. And bring back maybe 9 to 10% and then pay it back. If I pay it back, your
face value remains the same. But if you don't pay it back, it will only reduce your face value at your point of death.
But they have to make sure that I've paid it for a while for me to be able to get a certain amount of loan.
That's why I'm telling you. They will tell you this is what you qualify. So you can only take a percentage of that.
Because I can't get a premium today and then tomorrow I'll hit the bank and ask for 300,000.
But
and then I default paying it the next
qualify.
day. Yes, I see. I see what you mean.
You are only given on what you qualify. So if you have been in that policy for long, then you have a substantial amount that you qualified for.
That's a good thing, though. It means I can get a loan will good credit determine such things, or that is an assurance?
That has got nothing to do with the credit.
So if okay.
Yeah.
Oh wow. So if today I take a life insurance, 10 years from now, my business maybe needs to expand.
Yeah.
I might get a good amount.
Yeah.
Without even caring whether I have good credit or not.
Yeah, because your loan will be based on your insurance.
Yeah. I see. Okay. Oh,
So, at the point, if you are not, at the point of death, you have not paid that loan, then your beneficiary, you will get less what you owe.
Yeah, because they'll have made sure they have their money.
Yeah.
Okay.
Yeah. So you are able to fund your commitment against your.
It's the same way people do with 401k. They borrow against the 401k.
Yeah, it's something like that.
Almost like that.
Yeah.
Wow. And those are the two categories.
Okay, then there is the one you are talking about a joint survivorship policy.
Oh, that's a whole category by itself.
So that is a one policy which covers two people. It can cover you and your wife. It can cover you and your child. So this policy pays a certain amount of money when one of you transition.
Yeah.
Then when the second person transition, then that money is paid to the other beneficiaries. Yeah, so that is a policy you can take with your spouse.
And it can fall under these other two categories.
Yeah, all the other benefits are the same.
Okay.
Okay. And this one can fall under term and can also fall under whole life. Yeah, so it shares both of them.
I see.
So you choose whether you want to go the whole life way or the term way. Yeah.
I see. Wow. I have learned so much in a very short time. I'll have to talk with my significant other to see whether we can buy one.
You are supposed to have bought one.
I know. You see, I had bought one, but with the wrong motives back then, just to please my friend.
I've talked to you about insurance for a very long time. So
yes, you have.
I thought you have bought it from elsewhere.
No.
You can even buy it online.
Yes,
but
yes.
I discourage people buy insurance from online because when you buy insurance from online, you don't get all the questions answered.
And you don't know exactly who you're buying from.
Not even who you are buying from. You don't know what you are buying.
Yes.
Because you hear advertisement, they tell you can buy a life insurance which you pay a premium which is the cost of a stamp. You know there is no insurance.
I saw actually someone saying, I saw a pop-up, get 10,000 instantly because of life insurance. Then you click on it, that instantly is 10 years from now.
Yeah, so what happens is that when you buy that kind of insurance, at the point of claim, that's when you realize there were so many exemptions that are excluding you from, or your beneficiary to claim that insurance.
They are dubious.
Because when you are dealing with agent, even after you have signed in an insurance, I have to come sit with you. I go through that policy document from the first page to the last page.
Yeah.
So if you are not sure of anything, I'm able to answer you. Okay? If you feel that what you bought is not what you wanted, you can cancel it at that point and get back your money.
I see.
When you buy it online, the time you realize that what you bought is not what you wanted,
wrong.
You have already paid some thousands.
Some thousands.
And if you fail to pay the next premium, the policy lapses. So you lose your money.
Wow.
So I would advise that if you are looking for a life insurance, talk to an agent.
Yes.
Because an agent is going to help you
maneuver,
identify
all those, yes,
what you need.
What you need.
Because probably what you need for life insurance is different from what I need for my life insurance. I don't know what you want to protect.
Yes, yes, yes. Very true.
You see? So when we talk with you, I'll get to know this is what Sam wants.
Yes, yes.
And for Sam, he needs this kind of a policy.
So you'll customize something.
So I'll customize to fit
my
your
needs.
And that's how you own that policy.
Wow.
Because if you know it addresses your need, you are going to safeguard that policy with your blood.
Yes, yes.
Meaning that even if today you are jobless, you make sure you borrow money to pay that policy.
Wow.
But if you don't own it, that is the first thing you do away with.
If things go south in any way financially.
If you have a financial turbulence.
That's what's happened to me.
Yeah, if you have a financial turbulence, life insurance is the first thing you do away with.
Yeah.
Reason because you don't own it.
You know, it happened to me back then when I bought that insurance. And eventually, I ended up with a Netflix account. And my insurance was the same amount with the Netflix account. I'm like, why did I lose the insurance? And
you see, let me tell you, Sam.
Yeah.
If you can be open to me, you didn't lose it because you couldn't afford it.
No.
It's only that you did not put your priority right.
Yes, I did not.
Because there are so many things you do with your money.
A lot.
Which add no value to your life.
Very true.
But you think they are more important than
at the moment
than paying for your life insurance. Because I know, how much were you paying?
Around $12.
$12.
Yes.
And I know you could meet with your friends, take them to a restaurant, spend $20, $25 in one sitting.
And sometimes go and back then go on a negative because I was not prepared anyway. But I'll still sacrifice.
So, because there is normally when you are trying to encourage people to buy life insurance, there is this objection always coming. I can't afford.
And you know, it's sinking in me better now that you're saying it.
You say you can't afford.
Yeah.
And then you have the most modern cell phone, which
an expensive car.
Yeah, which is expensive and which is upgraded almost every 3 months.
Yeah. So
every 3 months, your bill for that phone goes up. And you see, a phone, whether you have the most recent phone or you have the old generation, the purpose is still the same.
It's still
but you are putting yourself in that situation just because you want to look modern. Yeah, so these are things which are taking out our money.
And sometimes just maybe going to eat too many times.
Yeah, taking our money, but forgetting to do the most important things. Most important thing. So a question of telling me that you can't afford.
That is outside the door.
Yeah, because I will never accommodate that because I know that is not true.
So everyone out there, you should have a life insurance, basically. It's a need.
Actually, a life insurance is a need. Like, let me say, in this country, let me talk about the white people.
Yes.
Insurance for a white person is a requirement, like the way you eat food.
Wow.
When a child is born, they take a life coverage on the life, or the probably the grandmother or the grandfather or
Yes.
the parent, they will take life insurance on their life for the benefit of that child.
Yes.
And that's why you find tomorrow you wake up, you have a friend. Tomorrow you wake up, your friend is a millionaire.
Yeah, I had a...
You wonder what happened.
Yes.
Just because a grandmother died somewhere.
I had a friend in Papa John's when I used to work for Papa John's. He was a driver, but he was living in a fully paid house. And I asked him, "What? You paid off your house?" He said, "Yes." And I asked him, how? Do you do drugs? He said, "No." He said he inherited money from the grandma's death insurance, life insurance. And it clicked to me. These guys, they live a high level life more than us, even if we work together. But then these guys have a better life than us, because he doesn't even have to work as hard.
Life can change for somebody in a day.
Yeah.
Just because a life insurance policy of their parents or their grandparent
has kicked in.
For example, I'll give you a life example just with me here. You see this building we are in here?
Yes.
The owner of this building, we were doing, he used to occupy one of the rooms here.
Yes.
A young man.
Yeah.
So when I came to this office, this young man had challenges.
Yes.
Paying for the rent.
Yes.
In fact, he was using my internet because he could not
afford it.
He could not afford it.
Yes.
But one day, his grandmother died. Not only was he able to afford to pay the rent, he actually bought this building. Now he's my landlord.
Oh my goodness. Really?
Now he even opened another office somewhere else. He has people working for him. You will just see him on Facebook talking on how he's enjoying in Mexico, in Africa.
Yeah. Oh, he's going all over.
He has money working for him.
Wow.
Yeah, just because of life insurance.
Someone who was borrowing your internet.
Yeah.
Oh my goodness. And I think Africans, we should embrace that culture.
Yeah, they should embrace that culture, and that's why I think we haven't done a lot to educate them.
We should stop basically being selfish because we are like,
but they also need to avail themselves to be educated and embrace that knowledge.
Yes.
Because, like, for example, let me tell you, I meet many of my African friends who are in the working rather. So I talk to them about insurance. The first thing they tell me is that they're insured.
Yeah.
And when I follow them to find out which insurance is this, they are saying they're insured. They are talking about the life insurance they have at their place of work.
Yes, I had one with AAA too.
So let me just make it clear.
Yes.
That insurance does not belong to you.
Oh, really?
That is a group insurance which belongs to your employer. The employers make sure he buys that insurance for you to ensure that if anything happens to you when you are working there, the liability does not fall on him. It falls on the insurance. And that's why you will never have a policy document.
And you'll never have... how about beneficiaries? No, because the beneficiary is
the beneficiary may be there.
Yeah.
because they will ask you in case of anything who
Yes.
are supposed to benefit from your insurance. Okay, but now that one depends with the employer. If your employer comes out and inform your family that Sam had this insurance with us, so this is the money that has matured. So it's under the.
It's up to them.
It's up to them. If they decide not to tell them, that money just
or
gets lost.
They
like
decide
that.
it's 10,000 instead of 200,000.
So I always advise those employees who have that benefit at their place of work to sign up for another one called Supplemental life insurance.
Okay, I see.
That is an additional life insurance which is tagged on your employer insurance where you pay for it yourself. It's deducted from your from your pay.
Salary.
Yeah. So that one now you own that one.
Wow.
Okay. So that one your family can claim that one because you will have information as for that policy.
Wow.
Okay. The only catch here is that if you cease being in that employment,
it's gone.
Even that supplementary, unless you follow it up with the underwriter, is also gone.
It's also gone.
Okay.
It's not like 401k you can always reclaim it back.
No, it's also gone.
Yeah.
So it's very risky also. So that's why I always.
The same thing. So even AAA, they offer life insurance for $10 extra.
Yeah, that is supplemental.
That's a way to keep you actually not to get rid of the coverage, because if you get rid of it, you lose the insurance.
Yeah, because let me tell you what happens. If you lose the employment, for example, you decide to move on to another company.
Yes.
They have to, the underwriter have to review your policy again. The reason why they have to review your policy afresh is because the part that your employer was paying in, because your employer has to pay in some amount for your policy. Now when they review it in, now the whole premium will be on you. Probably you are paying $10.
Yes.
Whatever amount your employer was putting in now will come to you. And most cases when they review it, you find it's too expensive.
It's too expensive.
So you lose it.
Oh my
So I always advise people, buy a working insurance.
That's independently.
Yeah, a working insurance is a life insurance where you buy yourself, you own it, you have a policy
we
document.
call it a working insurance.
Yeah.
Okay.
So wherever you go with it. It even adds value to your bargaining power, because when you are arguing your benefit with your employer, you tell them, look here, I even have my own policy.
Yes, yes.
So I need you to pay me this much.
Exactly.
Yeah. And you don't have to worry whether you lose that employment.
You don't,
because it has got nothing to do with your employment. As long as you are able to pay for it, you are covered.
So, one more question. I have the insurance. I'm paying a premium of 150, but COVID hits and I don't have money to pay for my monthly. Then I call you. Is there a way to not lose my insurance because of such temporary circumstances?
Okay, now it depends the magnitude of the COVID.
Okay.
You are talking of being sick.
Or rather, lost a job and
losing a job, that's not an
there's no
excuse.
form of insurance.
No,
the way a credit card says, hey, you can buy coverage to cover you for 6 months in case of anything.
There is no excuse for that, because if you are sound and healthy, you need to look for another job.
Wow.
To service your insurance.
Okay, how about, last night my phone was disconnected. Not because I don't have money, but because my bank was bought by Truist. It was SunTrust. and lately they've switched the cards. So all my transactions that are automated have been bouncing unless I fix them. So I've been waiting for them to bounce for me to...
Okay. Because yeah, for such a situation, you know, you are dealing with the people.
Yes.
So you are, and
that's the difference between people and going online.
Yeah, and they are able to verify that information. So,
I see.
And also you are given a grace period. Because if you don't pay your policy premium for 1 month, you have a grace period to sort yourself out. But you cannot... There is a limited period of grace period. So during that period, you can make arrangement. Yeah. As I told you, the riders are the ones which takes care of the things you are trying to tell me.
Yes, yes.
But we don't have a rider for losing a job.
No.
We have a rider for being unhealthy.
Yes, yes.
But not for
losing a job.
Because a job, we know you can get another job.
Yes, yes.
So, and again, the insurance are very understanding. If you take time before you get another job, as long as you pay all the premiums which have accumulated for a certain period, which they will tell you, then the policy will be reinstated.
Wow.
Yeah.
That's a lot to learn in one day.
Yeah. Wow. So, so the moment you buy a life insurance and you put the right riders, there is no time you think that you are you think that you are not getting what you required.
Yes.
Yeah, because you know, if anything, if this happen, I'm covered.
Yes.
If this happen, I'm covered.
Yes.
Yeah. So what you have, what we call peace of mind.
Peace of mind.
Yeah.
Wow. And so now maybe the last question. And then have you summarized all those categories? Are they just the 3 of them?
Yeah, those are them. Okay, okay. All those, even those categories, they have subcategories.
It's a wide.
Yeah,
you really summarized
what
things.
I've done. I've summarized them just to give a basic information.
Yeah.
So now
we can put your phone number on the screen.
Yeah. So now, if you say you want a survivorship joint insurance, now you'll find so many other things.
Subcategories.
Yeah. The same thing with the whole life. There are so many other categories coming just to make sure we customize to your requirement. And the same thing with the term.
Yeah. So
those are just the basic, just to highlight, at least you know what they entail.
Okay.
Yeah. When you meet a prospect, most of the prospect, most of them, I think most of them, especially us from overseas.
Yes.
Overseas, I mean from Africa, Kenya, all those. Yeah. Because of the concept that they have not really understood what is life insurance, they tend to think that by putting some money for a life insurance is like throwing your money. Yes, I also thought so. You see? Reason being, they don't see the benefit. Yes. You see? And that's why, for example, when I do a presentation to you as Sam, and you tell me, okay, I've heard you, but let me go and discuss it with my wife. You cannot discuss it with your wife. Yes. Because your wife has never experienced a life without you. Yes. So me, I'll tell you, do you know any widow or a widower? Go and discuss it with the widow or a widower. They will understand it. Now you'll understand what I'm... The reason why here you have two faces. You have a widower or a widow who either the husband or the wife died with a policy or without a policy. Okay, let us say you meet the one who died, whose husband or wife died with a policy.
Yes.
You see, you realize the lifestyle of that family, if it hasn't changed for the better, it has a continuity.
Yes, it has not gone down.
It hasn't gone down.
Yeah.
Because when the person died, there was that...
They were covered.
They were covered, and therefore that protection came in and took that part.
I see.
If you go to a widower who now, either the husband or wife died without insurance,
yes,
it will be the opposite.
Yes. Trouble.
It will be the opposite.
Yes.
And so you visualize yourself in that situation. With the one who died with insurance and with the one who died without insurance.
So.
Now you'll be able to make a choice.
So
because if you go to your wife will tell you, Sam, you can't even afford to take me out. And now you want to buy insurance. So you tell me, the following day you tell me, John, I cannot afford.
Yeah.
Yeah.
For me personally, I think I'm convinced. This session here, you must have designed it to convince me that I need one.
Yeah, you need one, and talk to also to, I'm sure the youth, people of your generation will see this
They'll
video.
watch this, yeah.
Because you see, these are the people who actually need to change. Young people, because they are here to stay.
Yes. And
they are in a developed country.
Yes.
So they will live like they are in the developed country. All this fundraising we are doing as old people
will vanish.
One day they will come to an end.
Yes, actually it's happening.
You see, do you know something called NCKO?
It's an organization here?
Yeah, for Kenya.
I've heard of it, yes. Whereby you pay an amount of money in case of someone's demise or a family member.
You see, that is an in-house insurance. And still up to this moment, I'm surprised there are people who have not joined.
I'm one of them.
Eh?
I am one of them.
You see, okay, let me do marketing for them for a moment.
Yes.
You see, a welfare organization like that one, NCKO, it addresses an insurance which cannot be covered by any insurance in this country.
Yeah.
Because when you are a member of NCKO, you assure your family back home. You assure your mother, you assure your father, and you assure your siblings.
Yes.
And you also assure your immediate family, your wife and your children.
Wow.
Meaning, if anything happens to you, there will be some money to take care of you.
Yes.
If you want your funeral to be done here, it is achievable because there is money to do that.
Yes.
If you lose a brother back in Kenya, there is amount that is available to you to enable you travel to Kenya to bury your relative. No insurance, and there will never be insurance that will cover your relatives in Kenya.
No.
Okay?
That's true.
So that is a benefit which is with us, but people are not taking advantage. You see? because that is insurance per se.
Yeah.
Yeah.
That's true. That's insurance.
So I'm encouraging you and young people in the triangle to join NCKU.
Guys, you've heard it. You've heard it.
Even if you don't buy a life insurance for your life,
yes,
at least buy the tailor-made
for us community,
for the community, so that if anything happens to a relative at home or to you, you don't overburden the community.
The community, very true.
Yeah, because if you are not a member, and tomorrow you tell me I lost my brother, so I have to dig into my pocket to support you. And I only give what I can afford.
What you can.
Yeah. So chances are that we won't be able to raise enough money.
Yes.
To take care of that situation.
Very true.
Yeah. So talk to your fellow young people. Let them come and join NCKU. And at least they have an insurance.
Yeah. And is it for NC Kenyans only, or?
This is for Kenyans only.
In North Carolina or all over?
Is in North Carolina, but of course now they are all over because there are people who are moving to other states.
Some of them are truck drivers.
Yeah, they don't lose membership. So we have them all over.
Okay.
Even you, join NCKU.
I will.
Yeah.
Yes.
And I also saw you in our partner.
Yes.
The other investment.
Capital.
Yeah, investment subgroup, which was created from NCKU.
Yeah.
So you can see how far we are going.
Actually, we've applied, we've notarized the forms.
Yeah.
We are in the process.
Yeah, so you say by coming together as NCKU, we have come up with another investment group which will now safeguard us from Kenyans who are coming to corners a lot of money here.
Exactly.
In form of investment in Kenya, only to realize there was all these... it
has happened so many times.
Yeah. So now we have a group which we are able to invest here. And probably in the future, we'll be able to invest in Kenya ourselves. Not relying on other people.
Very true.
We are able to do our due diligence and identify good projects.
Very true.
Yeah.
Wow.
Yeah.
Wow. Yeah. Unicapital is a very good. Yeah. Very good one. That one, I'm totally sold to that one.
So you see, I've
actually
sold to you so many things.
Yeah. My significant other has totally joined in.
Yeah.
Yes.
Yeah. So information is power.
Yes.
So if those people probably who did not know about NCKU, they know.
Now they know.
Those who didn't know about the investment company, which is doing very well in North Carolina, Unicapital, they also know. So they know we are, as a community, we are doing something. Yeah.
NCKU, do you have an idea of the payments currently, or?
That one
we cannot announce here yet.
In December, there is always information that comes in on Jamhuri window.
That's when
so they will tell you what you are required to do, and the application period is within this period.
Yes.
So if you are interested, you can
join in.
You cannot join in within that window.
I see.
Yeah.
Wow. I think we are coming to the end of this.
Thank you. That was a very nice discussion.
And this is just the first one, for sure. Are you going to let me come again and again?
You are always welcome.
Yes.
Yeah.
Because there is a lot.
They are always welcome.
Yeah.
Any information that I can pass over to the people out there.
There is too much.
I'm ready to share. Share it.
Very good.
Because knowledge is power.
Amen.
Yeah.
Yes. Wow. Well, guys, we've come to the end of this. And thank you so much, Mr. John Mureithi. And we are really, really appreciative of this. Just giving so many nuggets. You know, this information is usually, it does not come for free. It does not.
Yeah.
And yeah.
Yeah, you are right, because when you go for a lawyer consultation, you know,
pay.
you know what kind of money they pay.
You pay.
But you say not everything that has to be measured on a monetary
value.
way. No.
Yes.
No, sometimes it's good to share the little knowledge that you have.
Yes.
To educate the masses.
Yes.
Yeah.
And I must say that you're one of the most admired men in Raleigh. I can attest to that. Maybe you don't see it so much, but I see it very well.
Well, I don't know.
Yeah, because of your integrity and your consistency and just the way you run things.
Thank you for that. That one encourages me.
Yes.
Yeah.
Yeah.
That encourages me.
Yeah.
And you see, when you are encouraged, you are able to step up.
Yes.
Yeah.
Would you mind telling us how we can find you?
Yeah, I'll give my
phone number.
My phone number.
And email.
Yeah, my phone number is 919-931-4505. That's my cell phone.
Okay.
My office number is 919-995-3835.
Wow.
And I go by Fair Insurance
and Tax
Services.
You've had it, guys. What more can I give you? That was great, and I really appreciate this. And until next time, guys, please subscribe. And again, thank you.
You are most welcome, Mr. Sam. I really appreciate your time. I know you are not easily found.
Actually,
I'm even surprised that you had all that time with me.
Actually, sometimes I'm just a lazy person. Yes, sometimes, you know, I'm just a lazy person. I don't keep up. It's not that I'm so valuable.
Yeah, but the thing I'll tell you is that follow our fellow Kenyans wherever they are. We have so many professionals. Let them share what they have.
My goodness, I hope you guys are hearing me.
Yeah, because we have many professionals. We have mental health practitioners here, and you know that is another area where we are having a major problem.
Yeah, you know, there is a Kenyan clinic, rehab.
Yeah, so you can meet those people. I have even people in my family who are in that. My wife is a mental counselor.
Yes.
Dr. Abby is also a mental counselor.
Dr. Abby.
Yeah, is also a mental counselor.
Your daughter is now a doctor.
Yeah.
We were dancing with her the other day.
Yeah.
So big up to Abigail.
So she can share her knowledge with the young task.
Yes, I should call her in one of them.
Yeah, in fact, that should be a person you need to interview.
Instead of me running, you know, we have a tendency to run to the old, we call them the old G's like you, who are so seasoned. And the young ones can also give us a lot.
Because right now she's a student counselor in VCU, that is Virginia.
Virginia?
Yeah. Virginia Commonwealth University.
Oh, really?
And she's counseling young adults from this country. Why can she counsel young adults from Kenya?
Kenya?
Yeah.
It's amazing.
Yeah, and they are suffering the same problem.
I surely will look for her.
Okay?
Yes.
Thank you, Mr. Sam.
Thank you so much. It was great to see you.
Thank you again.
Yes, until next time, guys.
You are always welcome in this office.
Thank you.
Yeah.
I will be back with more than 10 times. So buy some shirts. Don't repeat them like me. I get to be roasted sometimes because of repeating clothing.
You need to mark that with John I had this.
Yes,
so
I need to.
So next time you make sure that
actually, guys, forgive me, guys. This is the third time this shirt is appearing.
Yeah, you come with a different attire.
Yes. Okay, guys, it was great. We are done here.